Alright, so let's get started. So, probably one of the best months of. Actually, I would say probably the best month so far this year. And it's pretty much the least expected considering like September, August, or like July is usually a middle, kind of mid-tier month. August is so far always been my worst month, and September has also been a close second every single year. I guess my assumption is like, or my excuse to say the least was like, all the banks and all the hedge funds and all the volatility, it kind of dries down, and I guess like the bankers are taking their wives out to the beach or whatever the hell, going on vacation, kind of doing their summer stuff with their kids, who knows. But volatility seems to always die down in the summer, and I attributed that to me, I guess, having big drawdowns or big-ish drawdowns, like basically finishing negative months. But we're gonna kind of go over what I saw, as well as what I can expect for next week. I don't really do like weekly outlooks or whatever, but I mean, you can might as well like kind of mark something out, see what happens. So, big thing I use in my trading is it's kind of like the way I think of it is like intent, so to speak. Like, if I see a range and a zone and it comes back into the thing, I want to see how this retracement and then extension kind of plays on. Meaning, if we're just looking at like basically a break of whatever, doesn't need a break, but let's just say a leg up, a retracement, it's in my little box or whatever, and then I'm looking for continuations. I then want to see, are the continuations essentially met? Are we getting through this high efficiently, or are we hesitating up near the highs? Sometimes we get a move like this where it goes sideways and then it runs, and that's where you see like all the S&P, the smart money traps, where they get like liquidated right here, or you usually just see like a big flush. Sometimes we see like we push up, we wick, and then we retrace, basically breaking this low. But essentially what I'm trying to see is there intent to continue up higher? And I use the higher time frames for that to basically decide if that's the case or not, and I base my bias on that. So an example of this, just visually looking at it, is like, let's go on a 15 minutes, just to make this look a little easier. This is also hindsight, right? We have our 15-minute zone. I'm sure we have a little bit of liquidity, whatever you want to call it. Our reaction inside the zone was bearish, but our intent was we should not respect this. We should expect this to go lower, essentially. Like, if this bearish zone is going to hold, we're going to push up into the zone, we take our sell, and we're supposed to take out the lows. I don't aim for like high RR, so essentially it doesn't matter, but it's a good way to play a bias. If this zone holds, it usually means that the idea of this is not going to continue. Great example is like, okay, push down, comes back up, right here, we wick, we don't continue through it. So the intent here, if after I see this 15-minute candle form, is to go bullish, and to not expect this low to get taken up, because we already failed the 15-minute candle. And the same thing goes with like, all right, we're going bullish right here, we come down, these are liquidity lows, whatever the hell you want to call it. To me, it doesn't really matter. We take out the low here, but we have no intent to continue. The minute I see this 15-minute candle, I'm looking bullish. You can call that like a retail pattern, a star, doji, whatever you want to call it, indecision. But it's just a pattern I've noticed a ton. Kind of holds. Immediately we got these highs, we push up. If we go on like the 5-minute or whatever, immediate rejection above these highs. So the intent is to at least go down for a I don't know, a finite amount of time. We can look for bearish trades in here. And so I trade based on that, essentially. Example is like, we see push up into this zone. Their idea was we're supposed to come down here. We failed to break the low, so essentially I'm looking for longs, unless there's a 50-minute zone that is for next week, longs up into here. Because we already failed to basically deliver this idea down, and so my idea is to, if we can't break the low, there's a reason why. Like, we're not just like sitting here. We could continue bearish, I don't know, but like this is kind of the idea behind the way I trade. I'm really based on 15, 30-minute, 1 hour max for a higher time frame, and I trade 1 minute based on all that stuff. So again, it's like we take out the high right here, there's no intent. Immediately we break down, we break this zone that would have been right here. I could go bearish, and I can go bearish where? Into the bullish zone right here. Because the idea is like we're still bullish, so we should see higher time frame. But if we can't break the first time, we usually don't go back down into a range right here. We usually test something lower, or we completely just break down. So it's based on like 5, 15-minute, 30-minute. But I'm in and out of trades rather quickly, so it essentially doesn't matter too much if we do break the low or break the high or whatever exactly we're talking about. And yeah, I'm wrong, I'm right, sometimes. So we'll go back here. Another thing that's decently big into my thing is I pay attention to ES on the higher time frame. So we take a look right here. We could have drawn like a zone here or a zone down here, which I have drawn. Take a look at this. This is 10 a.m. on NQ. 10 a.m. right here on NQ right here. This zone totally got obliterated. To me, I don't take wicks. Wicks are breaks for me on, depending on the context. I don't like wicks when confirming a zone. Meaning this NQ zone is done for me. I'm not going to look too long along it unless ES is holding. So I use this kind of as a piggyback because there's some days that we're tapping into like actually like no zone. Let's see. Oh yeah, this one right here. So like, yeah, so on ES we tap this 5 minute just fine. It's also like a 15 minute or 10 minute. It just depends how you refine it. It doesn't like ultimately matter. But we take a look at it on NQ, and it's that 5 minute is this candle right here, and we wick through it. So I mean, some people trade like absorption or wicks or whatever, but I would be having this on a second monitor or a split screen, and I'd be taking a look at how the 5 minutes are reacting on ES, still looking for NQ shorts, and treating the NQ zone as the ES zone as the NQ zone, even though we might have gone through it on NQ. So it's like a little bit, some people use like this with like DXY correlation with gold and stuff like that. But yeah, I mean, again, I'll also look for zones that are tapped. Like I don't know if this is tapped on ES, but we're gonna take a look. So NQ, what is this? Wednesday at 9 a.m. Go to ES. Let's go to Wednesday. Wednesday, it doesn't look like it's tapped. But like if this zone is tapped on ES, I will look for NQ longs, regardless of if NQ actually tapped into it. Because ES tends to be like the bigger brother that pulls along his little brother. And it basically ES is the one that controls NQ for the most part, I've noticed. And I'm sure you've heard like SMT, like sometimes it takes a low and sometimes it doesn't. So there's a whole bunch of different things. But essentially I'm using a whole bunch of different concepts to find the higher time frame narrative for at least enough time I can take my 1 to 2, 1 to 3 RR trades on the 1 minute. So, I mean, like, and I don't even have a higher time frame bias all the time. But like, an idea what I was kind of going with earlier is we have a zone here, we tapped into it, push up, come back, break the high, immediate rejection, we go down lower. So if we were to take shorts, this zone right here would be perfect for me for shorts. And I would be looking short here even though we're relatively bullish. And obviously I don't trade pre-market, so I wouldn't be taking these trades, but this is the idea that I have at least holds up pretty well. It's like, if we want to see continuation, we want to see like at least a few candles after. So it actually shows some intent. Like if we take a look here, when we're trying to go bullish up this zone, right here, we don't even like look, sure we get a little bit of rejection or whatever the hell here, but just to pull back into this 5 minute or whatever zone to continue. Like this is what I want to see. And then if we're up here and then we pull back, it's a different story. But if the minute we take the highs out and we get an immediate rejection and break a structure in imbalance zone, this to me would be a great short. And I would take the short to my RR target. So usually my RR target is before this. I mean, we could take a look. Like you can see an SND 2.0 if you trade MentFX. That got formed, but I mean, let's just go back just for shits and giggles. We go on the 1 minute. Oh my god, that's atrocious. But yeah, like simply it'd be right here, zone. We're technically bullish on the 1 minute, right? Push up, come back, and we're failing to break this high. Like we're failing to continue up higher after we tapped into a bearish zone. So it's like boom, come here, wick, okay, then we come back down, and then we try again. Nope, break. Zone here, I'll take it, or zone up here, I'll take it. And I mean, like you could immediately get your trade like this. Most likely probably go with like a 3 minute just to kind of cover a little bit more. Oops, no, there's none. Yeah, probably this would have been great. And there'd be my trade, and then you target opposing zones for me. So my opposing zone would be here, and you get your rejection. And then sure, like if you went break even or whatever, it comes back and you probably still would have been good, but I would be most likely out here. Like this is a 1 to 6 trade right here. So my short tool, 1 to 6 at least, probably like 1 to 8. Just kidding, I'm smoking crack apparently. 1 tick spread, literally you don't need it. Target here 1 to 5. Maybe I'm a little smoke a little bit of that purple haze saying it's a 1 to 8, but I mean I've applied this stuff and I usually take this like 1 to 3. Like genuinely, I don't see myself taking it further than this low, but especially on prop firms like this trade, I'm taking 1 to 3, 1 to 2, 1 to 1. Usually it's 1 to 1 or 1 to 2. Let's just go over my week really quick. I didn't mark this out because I have a zone here. I don't. But the idea is like, the idea coming into the day is we have a zone here. We tap into this. Again, what I'm saying is we see bearish up here. We fail to break the lows, especially during New York Open. New York Open tends to have a lot of reversals. We tend to fall, reverse, and then go up for the rest of the day, or the opposite. So I mean, like London bullish, New York bearish, London bearish, New York bullish. So plotted this in. Coming off of this zone, to me this doesn't really matter too much. It's more just context driven. Like our idea is probably this. Tested the highs once. Then after we tested the highs, we came back into the zone. And if we were going to continue bearish, we would have continued bearish here, and we should have just taken out everything here and everything here. But because we failed this 15-minute candle right here, unable to take out lows, immediately I'm looking bullish. And I don't know if I took a trade. Like I have all the trades I took posted. I mean, we can kind of just go over it just to see. Yeah, so I think I don't know if I took a trade here, but the idea is like we wicked already on the 15-minute here. So I was looking here to go bullish, expecting this move right here, but sooner than we actually did. And then very, very easy. I mean, you can see just based on candle formation, we tap into the zone, we push up, come back, and then we, again, same idea. If we're going to continue bullish off here, we shouldn't be failing the highs. Like we should continue through it like it's no problem. So the minute I see this, you cut a trade or you take it at opposing zones. Because I mean, for me, opposing zones are like stuff like this. Okay, that was like obviously hindsight, but that's the point. It's the imbalance below or above it, depending on what zone, bearish or bullish. Again, we come back down, take out this high right here, immediately reject. And so to me, it's like if this zone holds on the immediate rejection, we're going to continue up through this, because if this zone doesn't hold, we're going lower to here. So that's sort of how I trade. We're going to get the 15, I don't know if I can get 15 second back here, but going to 15 second. I tend to confirm all my trades on 15 second. Yeah, we can't. Maybe 30 second we can use. When is this? This is Monday, August 24th. So I'll check the 30 second, but yeah, I mean, S&D 2.0, if you traded MentFX, basically just a zone created off of another zone. And so if you take this bearish trade, you would have been fine, but there's this bearish trade, or with the context of this going bullish right here, this is either going to get flushed through, meaning we're trading right through like it doesn't exist, or it's a pullback to come back to something here. And so when I see this pullback, I don't expect price to go below this low, because if it does, this idea is completely trashed. I don't like taking the second tap. I like taking the first tap, and then I'll take one trade here. If there's another great one, I'll take another one here. But usually I'm in the first trade. It's in either an S&D 2.0 like this. We'll take a little market structure shift, or break a structure like this, or we'll take like one of these. Sorry, it's like this. So this doesn't need to be a main structure. Sometimes it can be an internal break. Sometimes it can be an S&D 2.0. It's basically whatever I get, if I'm being completely honest. Yeah, so the idea at least that we have is we're going bullish like this, right? So if that is the case, why would this contextually make sense on holding to continue lower than this low, if that makes sense? This should hold now that we're in the bigger one and then made another one. This should hold, and all the stars basically align. Big impulsive candle, we got a buy zone here after we're in a bigger buy zone. So ideally we're seeing this micro pullback, which is like a mini range on the 10 second or 5 second. This is this, and then we're coming back into here. And then we should take out this high is our idea at the very end. for me, I'm taking this is mitigated right here. This is mitigated. This right here is not mitigated to me. So contextually, boom, that's it. I'm done. That's my exit at the very latest. And then sort of the same idea after this break. The minute we break the lows for the day, I would zoom out, see what's going on. We're unable to break low here. So to me, this is like this is basically a failed thing, because the minute we try and touch the lows here, no Diddy, I wouldn't expect a pullback here into a zone, or a pullback up here into a zone to then continue lower. I'd expect complete reversal, but I don't trade the complete reversal. I have to see it actually happen in person. Meaning I'm confirming every zone regardless on the 5, 10, 15 second, or S&D 2.0 or whatever the context it gives. Meaning if this idea, like if this is just like a search and destroy day where we're taking out liquidity on both sides, and this is ultimately going to be a liquidity grab to go through this, I sometimes get a trade in here to take it to at least this high before it falls. So it's like I can be wrong about the overall direction and still take profit, and really rarely am I right about the direction and don't get a good entry, because it's pretty simplistic. At least you have 3 entry models, 2.0, any sort of break, choose the best one. You can cycle 15 second, 30 second, 10 second, and aim for 1-to-1. Sometimes, dude, there's some days I even go for less RR. But the idea kind of stays the same. It's the same idea every day. It's just you have to spot it. And you could have been bearish the whole day right here. Like you could have been bearish, taking your short right here, and you could have aimed for this zone right here, and then you would have been good. That's 5 RR. As for the rest of the days, we'll kind of go in. So that's how many on Monday. Basically, like high time frame context, very easy. Bearish. Try to go break the highs. 15-minute bearish. I usually use a higher time frame to figure it out. This zone is thrashed on this time frame, but if we go on ES, it held the 15-minute, or what am I doing? Wednesday, Tuesday. What's Monday zone? Monday zone. It looks like it's like a 30-minute or 1 hour. So yeah, 30-minute, 1 hour. So I would be looking long here, and if you look at this at a micro, like a internal level, just looking at candle formation, push up, come back, tap into this. If you then go here, fail to break the low. Like if I'm trading a higher time frame system right here, I'm taking this long right here, and I'm just covering the low here, and then you could take this 1-to-1 or whatever, target the highs of this, whatever. Boom, there you go. There's your higher time frame system. It's just using, instead of this, I like to aim for this, but just look on the lower time frame. So contextually, we tap that zone at 10 a.m. So if we were to look for longs at 10 a.m. right here, actually I took a long at 10 a.m. It's funny, but exactly what I'm saying. Like I didn't even remember this trade. And if you look on the 5-minute, I'm not going to get too deep into this, but what this is again, it's kind of like S&T, but it's a little bit different. It's called the delta divergence, I believe. Something like that. Let's see what it's called. I don't use EMAs. Don't worry about this. I don't use this either. Haven't touched these in a while. Pause. Basically, when you see price, to explain this really quick, it's essentially just SMT divergence, but with sellers and buyers on the pair that you're looking at. Again, I look for intent, meaning if we don't break this low, what's going on here? Right here, we see this low. Right here, we see volume crack the low, but we see price not able to crack the low. Meaning volume is trying to continue lower right here, and there's a passive buyer here that's buying up orders, not allowing price to actually go, regardless of the volume actually getting below it. And so this also works the exact opposite way. Sometimes you'll see price tank beneath a low, but volume won't follow suit with price, meaning volume is just flat and then price is going lower. And that means that there's not aggressive sellers involved, and aggressive sellers are just market sellers. Because like if you're going to market entry into a trade, you're an aggressive person, you're trying to get an aggressive entry. And so if this was completely flipped and we saw this price down here and we saw volume not crack this low, we could see that there's not selling volume, but price is still getting rewarded. So that can basically be like a kind of a liquidity grab, or you'll immediately see it get wicked or bought up. So you can find a good example of that later on. I don't know if there is. Yeah, so again, this is actually a great example right here. The idea is like we can combine this with the idea of we're in a 15-minute. We see this high, we see price crack it to tap into our zone. We don't see volume of the buyers taking out this high that's right here. So if we look at the candles, we did crack this high with price action, but with volume we didn't see the follow through of this. Meaning this could be a fake move, and if it contextually lines up, like we're looking bearish from this zone, we can combine these two ideas and the 1 minute, we'll break a structure, etc. Which there is a trade in here, I believe. Like you can kind of look. Then immediately you're gonna see follow through lower, most likely. Like obviously nothing is perfect, but it's just like little confluences that we can add. That makes sense. I hope the way I explained it is really good. But again, what we'll see is we tapped into the higher time frame zone, we took out a high. Immediately we didn't see follow through after we took out this high. Essentially meaning like if we want to see this, we want to see this pull back and we want to see this rip. Because this would be a fake move, this zone's gonna get destroyed and we'll go through it. But we don't see the fake move. Yeah, I think this is a 2 minute actually, just based on the way it looks. So hold on. 2 minute or 30 second, I'm not really sure. So we can tap into this. Just look at the amount of candles here. I'm not taking an S&D 2.0 on this, just based on the amount of information we're gonna get here. Usually on these old zones, this would be equivalent to like a 1 or 2 hour zone. So I'd like to see more candle confirmation. It's not something very like simple like this. There's not a lot of information here, meaning I can just take a break of structure or an S&D 2.0, whereas we're gonna get 20 candles in here before we move down. So ultimately the greatest trade would be right here, and we can dial this down even. I don't know if we can go lower. We can go lower. Again, we take this 2 minute zone. If you want to confirm it with an S&D 2.0, we then push through the highs right here, immediately get rejection lower. Obviously it's a wick here, but in the context of going bearish, a wick is enough for me. And then you could take a 15 second, I assume that's what this is, 15 second, take the high, and then you target even lower. And yeah, this is like probably an A+ setup. We have the 5 minute that's lining up with the SMT stuff, or the whatever you call it. You got your structure break 1, your structure break 2, and it's like worst case, let's say you did take this just straight up. Like you're taking a 30-second trade and you're at 1.5 R right here. That's why I don't preach low RR, but it definitely is really great. You take a look, where is this gonna reverse from? This is a bullish zone. So if you're gonna go break even for this trade, like immediately you can take a risk off right at this zone. And I mean, like, sure, it's not amazing RR, but like you're pushing 1.5 R, and I mean this is what I would go for on a prime setup anyways. There's a lot of money to be made here, if you were a little too premature for this. And so right here we see the idea of what I'm saying. We're saying push up back into a buy zone, and then we immediately take out the high and immediately reject. It doesn't need to be a break, but if we immediately reject above a high in a higher time frame bearish zone, and we see a zone or imbalance get created, and then there's a candle or a zone up here, something like that. There's our red zone imbalance. If we're continuing bullish, rarely do we get bearish zones. Like in this context, yeah, we got one, but like where are the bearish zones here? In the context, like this is fucking so ideal right here. Actually great. It's like it's just perfect. And yeah, this is Tuesday. I'm not going over all of my week. You can probably see it all posted. It's the same shit every single day. Again, we'll just go over the higher time frame. This is a 5 minute zone on ES. We can see it right here. Yeah, 5 minute zone looks prime, 15 minute or 10 minute, whatever you want to use. You can use this whole thing, but it gives context to actually go bearish. Whereas NQ, you're like right here and you're like, what the fuck, or right here, sorry. You're like, where the fuck are we going? Like this wicks through it or whatever. And you have your NQ zone up here. ES, I don't believe had one. Wow, these were, it's a Thursday. Oh wait, hold on. I think I'm stupid. I think I mean dumb. Yeah, okay, so this high is that zone right here. So again, the idea is like we're continuing a bit bullish. We shouldn't respect the zone if we're going higher. We immediately reject. You trade market open, that's a 1 minute zone. You go down here. Like, again, what do we see? We tap into the zone, come back down. We continue bullish, we come back down, and we're basically just like trading sideways here. To me, there's not enough stuff. Take out this high, immediately reject. This zone doesn't hold. So if you're gonna get short, I would get short either here. One thing I learned is if you're getting short, I trade both zones, the high and the low. If we're gonna continue super fast down, ideally you want to get in on this lower zone. Like, we're not going to trade, you're not going to trade like an inducement trader and then get all the way down here. Really rarely does that happen. Because when there's volume that's pushed, we just follow it immediately. So, I mean, this was really lucky. Exactly what I said wouldn't happen happened. And I mean, like, if we take a look at this, here's a 2 minute, we tap into the 2 minute zone right here. You could have gone short right here. I mean, if you're just going to confirm it with a candle, it's like push into here, boom, we come back, and then we respect the high, and then you could have maybe taken this candle short. But this would be a great candle to take short because we're still respecting the zone, and it's the 1 minute truthfully up here. And so you could take it short immediately there, target this zone at the very earliest. And there you go, there's your stuff. Take out the low, can't continue. We immediately go bullish off the first zone, which is here. It's like ping pong kinda. But I mean, I'm able to risk like 2 to 4% on most trades, no problem. As well as I've gotten some prop from payouts. I'm not gonna get too deep into that, but the way I'm doing this really works. That's all I'll say. Yeah, this is my week. Sayonara.